Have a management with us, a banking name that's joining in, and it was a strong quarter for UCO Bank with the best profit after tax in 29 quarters. The loan growth also looks robust, and the bank has managed to bring down its slippages. So it was a good past quarter. But what's the way ahead? We're joined by Mr. Soma Sankara Prasad, the MD and CEO at UCO Bank. Hi, sir. Good morning. Thanks so much for joining in. Well, a couple of aspects. Your advances are looking very, very strong on a sequential basis, up by close to 7%, on a year-on-year basis by more than 20%. What kind of a loan growth are you penciling in for FY23 as well as 24? And also, given that on the liability side, well, the costs are likely to go up. So can you maintain NIMs around this 3% odd mark?
See, as far as the loan growth is concerned, we have had a strong quarter. I mean, for the last 3 quarters, we have been seeing a strong loan growth. And I expect this momentum will be carried forward into the 4th quarter. So as you know, we have ended the 9 months with a loan growth of almost 20.5%, and we expect this to be carried forward into the 4th quarter. So far, there has been an upside as far as the NIMs are concerned because of the repo rate hike, where the transmission on the loan side happens immediately, while on the deposit side, there is a lag. But as you all know, what has happened in the last quarter is that there has been a tightening of liquidity, and all banks have raised their deposit rates. So the marginal cost of funds, that is the incremental cost of funds, would go up for the banks, and that would have an impact on the NIM. But still, see, our NIM right now, domestic NIM is at 3.18, and the bank's NIM is at 2.99%, almost 3%. So we expect to maintain this NIM going forward into the 4th quarter.
Okay, and you said loan growth at 20.5% year to date, Mr. Prasad. What do you see at the end of the full year? You said you will maintain it. So we're looking at perhaps 20% plus. Is this something that you could do in FY24 as well?
See, FY24 is a little far away. So, okay. I mean, let us stick to the last quarter of this year. So we expect this loan growth we expect to maintain this loan growth in the 4th quarter.
Okay, got that. Can you just break it up for us? Where are you seeing the growth coming from between, say, corporate, agri, retail? Where is the maximum amount of potential over the next year or so?
See, so far, if you look at our loan book, our corporate loan book has grown at 30%. Whereas, if you look at retail has grown at 15%. So there has been a lag between the corporate loan book and the retail loan book as far as the growth is concerned. So again, in certain segments of retail like car loans and home loans, we see strong demand. In fact, our home loans and car loans have grown at 19%, and our personal loans have grown at 23%. So certain segments of retail are showing strong growth. A corporate loan book is strong. And if you ask me what are the areas in corporate where we are seeing strong growth, of course, the NBFC sector has been one sector where we have seen, there is a strong demand for loans. Apart from that, infrastructure, renewables, cement and steel have been the sectors where we have seen a good demand. And with the capacity utilization picking up, I expect that the demand for working capital will also go up in the 4th quarter. Therefore, as far as the corporate is concerned, we are seeing a strong pickup.
Okay, all right. Let's focus on asset quality then. You know, your gross NPAs have come down to around 5.6%. Even your net NPAs have improved. So what's the guidance on the asset quality front? And even the slippage ratio has improved quite a bit. So guidance on that, on those parameters.
See, if you look at the slippage ratio, actually, the slippage ratio has actually drastically come down. It was around 2% last year. It has come down to 1.48. And if you look at the slippages last year, my slippages were around 6,000 crores, which was about 1,500 crores per quarter. And this particular year, the slippages have been roughly about 500 crores per quarter. So my slippage right up to the December quarter is somewhere around 1,500 crores. So that has been the main reason as to why, the loan quality has improved. The other reason being there has been a strong recovery as far as the bad loans are concerned. Because if you look at my recovery plus upgradation for the December quarter, it comes at 1,001 crore. While the slippages are at 490 crores. So consistently in these last 3 quarters, our recovery has been more than the slippages. So that is one of the reasons as to why the gross NPA has come down. Because while bringing down the gross NPA, see, if you look at our gross NPA even as on 31st March 2022, it was at 7.89%, and now today it is at 5.63. So the gross NPA in these 3 quarters has come down by about 236 basis points, whereas my provision coverage ratio, which is very important for us, that has gone up by 200 basis points. It's at almost 93.5, which is the third highest in the banking industry behind IDBI Bank and Bank of Maharashtra. So we have been consistently been able to bring down the gross NPA while at the same time increasing our PCR. That is primarily because our slippages have come down as well as the recoveries have gone up.
Got it. All right. All the best, Mr. Prasad. Thanks a lot for joining us and speaking to CNBC TV 18. So that's a good set of numbers. The loan growth is quite robust. They are maintaining a 20% loan growth that they've done in the 9 months of this year. And they're also seeing a good pickup in corporate loans. 30% is the kind of growth that they've seen. Now, Devin Choksi is still with us. Devin, this has become the darling of the market, right? The PSU banking space. But for some of these really small banks like UCO Bank, do you see a